action here is pretty promising. Now let's look at a couple other things. We've had some very promising moves, for example, in the industrial space. If we look at the XLI ETF, this represents the S&P 500 industrial sector, which of course is not an unimportant sector. We look at the weekly chart on that. Let me just quickly make a weekly chart, and you can see, again, the week is not yet over, but all else being equal, difficult to make a bearish case for this kind of a move, right? So the election results came out a little bit differently than a lot of people thought. Donald Trump obviously won the U.S. presidential election, and actually more significantly or more pertinent to this vlog is the outcome of or at least the initial reaction to that we saw in financial markets. Stocks, broadly speaking, have rallied so far. Maybe that's a little bit overdone in the near term, but quite frankly, what it's done is caught a lot of people on the wrong side of the trade. And luckily, my BT reversal indicator kept a lot of my Clubhouse members on the right side. In fact, I think everyone that used it is doing very, very well. Let's go through a couple things here. I'm looking at various parts of the market: transportation stocks, retail stocks, banks, all things, including pharmaceutical stocks, all things that I think we need to have a bit of a better idea of what they're actually telling us here from a risk-on perspective, potentially into year-end, maybe even to first quarter of next year. So let's have a look at a couple things here. I'm going to hit some more balls, but after that, let's go through and look at the charts. Okay, so let's start with the S&P 500, and you can see the S&P 500 has bounced right off its 200-day moving average. That's this red line you can see here. And if I were to just draw a very simple line, you can see that that has also coincided with that previous diagonal resistance, now potential diagonal support line. Now, it's important to understand that, the week as I'm recording this is not yet over, so who knows what's going to happen. But this so far is not a bearish move, as you can see. Now, of course, we still have economic gravity weighing on the broader stock markets. In other words, economic growth continues to be slowing. Same thing goes for top and bottom line corporate data. But nonetheless, price action here is pretty promising. Now, let's look at a couple other things. We've had some very promising moves, for example, in the industrial space. If we look at the XLI ETF, this represents the S&P 500 industrial sector, which of course is not an unimportant sector. We look at the weekly chart on that. Let me just quickly make a weekly chart, and you can see, again, the week is not yet over, but all else being equal, difficult to make a bearish case for this kind of a move, right? Yes, it could be a breakout, fake out, but so far, something that I think one needs to respect. How about stocks like JP Morgan in the financial space? Let's look at that real quick. Again, the week is not yet over, but if we look at the stock here, if it's going to come up here, you can see this is a monster move. Now, I think this is probably somewhat overdone here in the near term, but again, we have been breaking out of a pretty significant base here that's been basically taking place since about the midway point of 2015. So finally, a resolve to the upside. I don't think this has to be chased higher, but nonetheless, also something I don't think we can discount too much, at least for the time being. Healthy economies have two things going for them. For one, usually they tend to see a rise in their currency, and number two, they tend to see a pretty good rise in interest rates. If we look at that, you can see the dollar index here. This is the ETF representing the dollar index. Continues to so far trade within this sort of consolidation phase, but once again, we're getting pretty darn close to breaking out. So a stronger dollar would potentially be a sign that also the economy here is potentially going to start at least stopping its slowdown that it's been in for the past year and a half or so. Lastly, let's look at bonds real quick. You can look at this through the lens of the TBT ETF, which basically represents bond yields on the longer end. Now, of course, bond yields still remain very, very low, but you can see that's a move here so far that here too, I'm not quite sure this is something we can ignore because we're starting to see a change in trend from a trend perspective. So again, that post-election, post-Trump win move has caught a lot of people by surprise. I'm starting to see this as much more something that we need to respect both sides. Take the trades that you see to take place, but don't have any staunch opinion either way. Things are underneath the surface getting more neutral, where they've been quite negative for the past year and a half or so, but they're getting some more neutral. So take that for what it's worth, guys. I'll see you in the next video, and take care.